Have you ever opened up your stock brokerage and when you reach the order box, you're presented with a bunch of different trading options that mean basically nothing to you? All of these different trading options can be really confusing, and if you don't know what each one properly does, chances are you won't utilize them even if they might be beneficial to you. Hey, what's going on, savers and investors? I hope you're all having a great day. If you're new to the channel, then welcome. My name's Griffin, and in today's video, we're going to be learning all about the different types of stock order trades that you can utilize as an investor who's looking to make a trade on your favorite stock brokerage. This video topic actually comes from a couple different viewers that requested it, specifically after I released my Questrade walkthrough video, because Questrade specifically has about 8 different order types that you can utilize, and if you don't really know what you're looking at, this can be pretty confusing. The reason why there are so many different order types in the first place is because each one offers different functionality relating most specifically to the price that a trader might want to get in or out on a given position. I do want to mention that this video topic is a bit more geared towards active traders, so traders who are actually trading stocks on a short-term basis rather than investors who are looking to invest over the long term, such as myself. However, this is still a really relevant topic for investors and traders of all types because this information is presented to you every time you go ahead and place an order. So in today's video, we'll be covering the 4 main stock market order types that are available to you pretty much across all online stock brokerages. And by the way, if you still need to open your own brokerage account, then make sure to check out the link down below where you can open your Questrade account and get $50 in free trades. These 4 main stock market order types are the market order, the limit order, the stop loss order, and the stop limit order, and we're going to be looking at 2 different scenarios for each one on both a buy and a sell order. Now, before jumping into the different stock market order types themselves, what even is a stock market order in the first place? Well, quite simply, this is a way of telling the stock brokerage what the terms of your order are, relating specifically to the price that you either want to get in or out of for a position, and the time frame for which your order is still open in the market, meaning the time frame in which your order can still be filled. If you're enjoying this video at any point in time, make sure to smash the like button. It really helps this channel grow, and consider subscribing for more personal finance and stock market related content. Starting off with the most common stock market order type, and pretty much the simplest one to understand, we have the market order, which if you're using Wealthsimple Trade, Questrade, or pretty much any other stock brokerage for that matter, it's most likely going to be the default stock order type unless otherwise specified. I say the market order is the easiest to understand because it doesn't take into account a predetermined price point that you've identified as the trader for the buy or sell price of that stock. Rather, when you place a market order, you're basically just telling the brokerage, hey, I'm looking to buy a stock right now, or hey, I'm looking to sell a stock right now. Please just match my order with either a buyer or a seller that has what I'm looking for, and I'll take the latest and best market price. Now, when you do place a market order, the execution is almost instantaneous because we now have online brokerages rather than having to call up your stock brokerage by phone. All jokes aside, when you do place a market order, the brokerage is most likely going to execute and fill the order within hundreds of a second. However, do keep in mind that there is a micro time frame where there could be fluctuation of the price, and for this reason, you might get a filled order that is a little bit different than what you were expecting at the market price when you place the order. This micro time frame, though, is really only relevant to day traders who are looking to make returns down to the penny if they have a couple thousand shares out in the market on a given position. This little variance of 1 cent can make a difference. However, for long-term investors such as myself, the market order is most likely going to be sufficient because proper analysis of the company was made as an investment rather than a trade. Now, I do want to address one really important thing because I've had quite a few people reach out to me with this same question relating to making a trade on Wealthsimple Trade and having a market order be settled at a different price point than what they were expecting when placing the trade. The reason why this may happen is because the market information that is fed into Wealthsimple Trade is actually 15 minutes delayed, meaning that when you're looking at a certain stock on the platform, you're actually looking at the price point from 15 minutes ago rather than the current market price. Let me show you what I mean by this by comparing the Wealthsimple Trade app and the Yahoo Finance current market price. Alright, so I know I said Yahoo Finance, but I meant to say Questrade IQ Edge because this gives us a level 1 market data automatically. So as we can see here, looking at the Shopify Incorporated, so shop.to stock on Wealthsimple Trade, we see that it's now trading at $982.03. But like I said, this this is 15 minutes delayed. And if we compare this to the Shopify stock quote on Questrade's IQ Edge, which is much more up to date, we see that it's now trading at $986.15. And if we compare this price point to what we see on Questrade's IQ Edge, which is much more up to date, we can see that the current bid is $986.28, as well as the ask at $987.49 for a current market price of $987.42 on average. This is the reason why when people ask me whether or not using Wealthsimple Trade is a good idea for day trading, well, absolutely not, because you don't have any candlestick charts, you don't have proper analysis tools, and the market data is 15 minutes delayed. So you'd essentially be trying to catch a fish when it's already 15 minutes downstream. The number one most important thing that you need for day trading is at a minimum level 1 market data, which you can get for free when you open a Questrade account. This comes with every single account that you open with Questrade. Otherwise, you need to use a more focused day trading application, such as, for example, Interactive Brokers. With all that said, if you're looking to buy and hold positions for a long-term investment, then the short-term market fluctuations should really be of no importance to you, and a market buy should be a good option. The second most common order types is actually two different orders that are grouped together. In the limit order category, we have the buy limit order and the sell limit order. With limit orders, in contrast to the market order where you're telling the brokerage to fill your order based on the current best market price, with the limit order you actually have to specify a price target for the maximum amount you're willing to pay for a stock on a buy order, or the minimum amount you're willing to sell a stock for on a sell order. If this is a bit confusing, let me illustrate this with a couple examples. Starting with the buy limit order, you're essentially telling the stock brokerage the maximum amount that you are willing to pay to purchase a given stock. As an example of a buy limit order, here we're looking at a Tesla stock, which is currently trading for right around $776 per share. Now, if for example, you did not want to purchase it at market price, but rather you felt more comfortable purchasing it at $722, you would put a limit at $722, which is currently represented by this green line. And the moment that the market price would hit this limit, it would trigger a market order, and your order will be executed purchasing these stocks at $722 or less. On the flip side, with the sell limit order, you're telling the stock brokerage the minimum price point that you're willing to sell your shares. Using Tesla stock as another example, for the sell limit order, in this case, currently it's trading for $776 per share. Now, if for example, you were comfortable selling these shares at no less than $848.57, which is currently represented by this red line, the moment that the market price would reach this limit that you set, it will trigger a market order and will be fulfilled at either the price that you set or more. Do keep in mind that while limit orders have their place and can be really great, you can set a limit order, sit back and have the brokerage do the rest for you. If the price point that you defined is not hit exactly, the order will not be filled. For example, if you're estimating that a current stock is a little bit overpriced and you're estimating that it will fall down to a price point of $5 per share, well, if the price point does trickle down all the way to say $5.02, well, unfortunately, you're out of luck here and the order will not be filled. This can be one of the possible pitfalls of a limit order, and I've personally even seen on a bunch of my trades and investments where I set a limit order for a certain price point and it misses it by a couple cents, and then it goes back up to a nice price point. In addition to this, do keep in mind that limit orders will not always be filled in their entirety when a current stock is somewhat volatile and fluctuates quite rapidly in price. For example, if you set a limit order for $5 per share and this particular stock goes down to that price point of $5 per share and you had an order in it for 500 shares, well, during this time, if the price of the stock fluctuates back up to above that $5 per share price point, in this actual time span, there could have been only a couple hundred shares that were filled rather than your entire 500 order that you had placed. I personally use limit orders all the time, more commonly for buy limit orders when I want to invest in a company that I think is a long-term good play. However, the current market price is a little bit more than I currently want to spend, so I'll put a limit buy order at a price point that's a bit lower that I think it might reach in the short to medium term. The next common order type is called the stop loss order, which is also applicable to both buy and sell orders. However, with the stop loss order, it is much more common on a sell order. Think of stop loss orders as sort of the opposite of buy and sell limit orders, in that for a buy stop loss order, instead of indicating the maximum price that you're willing to pay for a stock if and when it goes down to a certain price point, with a buy stop loss order, you're telling the brokerage to buy a stock once it eventually reaches a certain price point where you think that the stock might continue trending upwards. Using the exact same example as earlier, however, this time with a buy stop loss order, currently Tesla stock is trading for around $768 per share. However, if you're quite bullish on this position and you think that the stock is going to continue trending upwards if it hits this current price point of $847, once again represented by this red line, you could set a buy stop loss order for the order to trigger at this red line and turn into a market order, so that in this case you can get in on a price point that you think is justified considering the fact that the stock will continue going up. On the flip side, with the more common sell stop loss order, this is when a trader or investor has a certain position and wants to make sure that they can minimize the amount of losses that they incur on a given position, hence the stop loss order, or if they want to make sure that they're able to lock in a certain amount of profits. The first scenario in where a stop loss order would be applicable is if you got in on a position at a certain price point, in this case represented by the green line, and then you want to cover yourself in the event of a certain loss by minimizing the certain amount of loss taken and materialized. So in this position, you would put a stop loss order at $760 so that if the market price reaches this red line, it will trigger a market order and you'll limit the amount of losses that you incur. The second common scenario in which you would use a stop loss sell order would be if you're currently in a position of having experienced some nice gains and you want to make sure that you minimize the amount of potential losses that you could incur on those gains. For example, if you got in on this stock at the green line, so $709, and in the course of time that you held the stock, it has gone up to right now trending at $769. You may want to put yourself in a position where if the stock starts to drop, you're able to still materialize some gains and not lose out on those returns. So for example, you might want to put a stop loss order at $754, which is below where it's currently trading, in order to lock in these gains right here. Unfortunately, stop loss orders are currently not available on Wealthsimple Trade, which is actually kind of ridiculous and is another reason as to why you would not want to be day trading with this platform. However, on Questrade, Interactive Brokers, and basically every other brokerage, this is a stock trade that is available to you. Moving on now to the fourth and last primary stock market order that you will encounter, we have the stop limit order, which is kind of a mixture between the stop loss order that we just looked at and the limit order. Once again, with this type of stock market order, it applies to both buy and sell orders. However, unlike all the other orders where you're essentially only specifying one single price point that you're comfortable with the stop limit order, you have to enter two different values, one for the stop price and one for the limit price. Starting with the stop limit buy order, this is when you set a certain stop price, at which point when the stock reaches that stop price, it will trigger a second limit order that you set below the stop price so that you're able to purchase shares of that specific stock at the limit price or below. This would be used when and if you want to purchase a specific stock while it's on an upward trend. However, you're not necessarily comfortable with paying that stop price that you identified. So if the stock does retreat a bit on its upward trend, you're able to purchase this stock at a lower price point, which is the limit price that you set or below. Alright, I know that could have been somewhat complicated, so let me try to illustrate this with an example. Let's say in the past, this was the current market price right here at $771 per share. In this particular example, the red line is the stop price and the green line is the limit price. So the stop price is basically a price point at which point, if the stock reaches that price point, it will trigger the limit order right here, in which case on a buy order, the shares will only only be purchased at this price point right here, so the limit price point or below, which is the nature of a limit buy. Now, the reason why you may want to use this is because if the stock is on an upward trend and you believe that if it hits this stop price point, it will continue going up. However, it might retreat a bit on its way up, in which case you can get this stock at a nicer price point. In the case of a sell limit order, it's really simple. You're once again going to set two different values. So you're going to first set your stop price, at which point when the stock reaches that stop price, it will trigger a limit order in which the stock will only sell those shares at the limit price or above. All right, so that pretty well wraps up the 4 main stock market order types that you would encounter when placing trades or investing for the long term. Questrade does also offer 4 different types of stock market orders that aren't as common. However, if you do want me to go over them, then leave a comment down below letting me know that this is of interest to you, and I'll get around to making another video going over these in detail and offering examples. I really hope you enjoyed today's video and that it helped you better understand these different stock market order types. If it did benefit you, then make sure to smash the like button. It really helps my channel grow, and subscribe to the channel for more content related to investing and personal finance. We also have a really nice portfolio of videos already available on the channel, so make sure to check those out. As always, thanks a lot for watching today's video, and make sure to check out one of these 2 videos overlaying right here. So on that note, thanks a lot, and I'll see you in the next video.